Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had 2 directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis.
Hey guys, James of TheChartGuys. It is Thursday, April 20th. Going to do my nightly video on natural gas. Natural gas currently has this downtrend line on the daily as resistance, and you can see that we have closed below that downtrend line on these candles here, and we are holding this price support here. This trend line here, so we'll see how it does at tomorrow's candle. Looks like we're either going to break bull from it or bear from it. What could happen is we just move sideways and this pattern just runs out of time because of the room left here. So what you need to watch for is a break of this pattern to go bullish oil if it breaks the downtrend line here. And what you can see is after we started setting on this bounce, high, higher high, higher high, higher high, and higher lows, low, higher low. We kept setting higher lows. Now what we're doing is we're setting lower highs. So we have this high on this bounce attempt. It's lower than this, and lower lows. So lower low here from this low, and looks like potentially another lower high here. So until that trend changes, we're going to be bearish in natural gas for now. And you can see that on the daily chart, we have that TCG bear cross. Again, TCG bear cross is when the 4 EMA crosses under the 8 EMA, green under the red, and the price is below both. So we back tested it now after losing the 20 EMA here on the daily. We back tested it once and twice and rejected 2 times already. So that's clear moving average resistance we need to get above. And what to watch for tomorrow is if we break above the high of today of 3.219, then we need to break above 3.223, and ultimately we want to really see a break above this high here of 3.249 and form a higher high on the daily. If we break below 3.134, the low of today, then red flag. If we break below 3.114 for further consolidation, continuing to set lower lows on after setting recent highs here. So for now, we're still looking bearish natural gas until this trend changes on the daily chart. On the hourly, something to watch develop overnight potentially is the fact that we did have an inside candle. Again, inside candle high and low is within previous candles high and low off this bounce. We broke it bullish here, and this could signal some continuation on this bounce. Look for a back test of the hourly 20 EMA here. The hourly 20 EMA currently at 3.179, and if we do continue bullish and break above the 20 EMA here, then look for resistances at 3.196 and then this recent high of 3.219 on the hourly. But by being in this range of this big red candle here, there isn't much resistance right now. As far as price goes, you could still really the high of this candle is when you'll see the next price resistance, or you could use this lower wick here for the next resistance. That's at 3.174, lines up pretty close to the 20 EMA, with the 20 EMA moving down at 3.179. So look for a back test of the 20 EMA. Rejection there would be a red flag for this inside candle bull break of continuation on the bounce from the lows of the day. Have a good night, and I'll see you tomorrow.